Hello and welcome to another episode of Expendable with Fibonacci X. Expendable is a series of conversations with investors and operators where we try to demystify the process of venture building. Hopefully you find these conversations useful. Please subscribe to our channel. Thank you. Today we have Karan Mittal with us, and Karan Mittal is managing partner at Carrot Capital. He's also partner at EV2 Ventures. He's currently serving on the boards of several early stage startups including Alt Mobility, EVs, and Mobile, etc. He focuses on investing in early high impact opportunities including electric vehicles, logistics, technology, micromobility, agri supply chain, and warehousing. I'll let Karan add more to this about your current role and what you are currently involved in.
Thank you, Kulmani, and thank you, Fibonacci X, for having me here. It's a pleasure. So I can start by my journey just to give you a background of what I've pretty much done. I've actually started my career in investing, so everything and all that I know is investing. I started investing from private equity in infrastructure assets, then moved on to investing in renewable energy assets. After that, I was investing across impact, post which I was part of a family office where I was running their real estate piece. And then I got the opportunity to be part of a global venture fund called Velos, where I was leading their global investments across consumer tech plays.
Right.
After which I set up my own fund, which is EV2 Ventures, focusing mostly on mobility, or what we call smart mobility. We defined this primarily as anything that helps move people and things and the technologies around it. And we realized that India is going to go through a large transformation in the mobility space with electric vehicles becoming mainstream over time. As well as the lack of a mobility fund in India. Globally, we had, Trucks VC, Autotech Ventures, Manav Mobility, but India had not seen a mobility fund focusing specifically in this area. And with the transition of electric vehicles, or let's say the automotive industry evolving, we sought an opportunity to enter the space.
Which year was this when you launched EV2?
We launched EV2 by literally at the end of 2019. So warehoused a couple of investments initially, and then started investing actively, 2020, 21, during the COVID era, which obviously was far more difficult from a fundraising perspective. And making investments, but everybody understood the importance of logistics and supply chain during those 2 years,
Right.
which catapulted our thought process or our thesis to the next level.
Right. And through EV2, you invested in how many companies?
Through EV2, currently we have a portfolio of about 11 companies odd. One transaction, the website, etc., everything on the public domain is 10. The 11th one is unnamed only because the wire has not gone through as yet due to delays of the lead investor. But that is separate.
Right.
But yes, it's 11 company portfolio. The thesis evolved from, let's say, investing across electric vehicles and the entire value chain or ecosystem of electric vehicles. Then the use case of electric vehicles, which is logistics, supply chain. That is everything from plant, yard, first mile, mid mile.
Right.
And taking that further into the ancillary pieces, which is warehousing tech, along with agri supply chain. I mean, India's largest agrarian economy.
Right.
So we cannot ignore that supply chain, as well as finance and aftermarkets. India is also the third largest automotive market. So aftermarkets is huge in India as far as we see it. But if the existing industry is going to get disrupted on an overall basis, what we will see is that every component or every piece of this at some point in time will get disrupted.
So before this, you were doing real estate, other asset classes.
I've luckily had the opportunity to be, investing in various asset classes.
Right. So how did you stumble upon EV after all those years?
So VC, investing is not about, as far as we understand it, and investing is not about, let's say, only what you know, right?
Right.
Investing is about what is the next big opportunity. It's the macroeconomic opportunity that the underlying, or let's say the overlaying macroeconomic opportunity and the underlying sectors that will feed that macroeconomic growth.
Right.
So if you're in the right sector, right stage, I think returns would definitely be there to be made.
Right. Right. But I see two kinds of people. Some investors always tell me, I only touch this because I actually understand this and I can value it. But probably that won't work in venture, right? Because venture is about future, inflections about future, right?
Historically, venture was designed. It's not an Indian concept, right? It was
Right.
obviously came in the
Yes.
US during the dot-com bubble. Venture was designed for investing in disruptive technologies. The idea of venture was you invest in anything that will change the landscape of what already exists.
Right.
How can you do that if you don't know it? Or let's say if a person knows it, let's say the question that you're focusing on is, if I only know this, then how
Right.
can I invest in disruptive technologies that are not even present?
Right.
So and that's where this thought actually stems from.
So when you entered EV, what surprised you, or what were your initial learnings?
So when we entered the EV industry or the segment investing in this, it was absolutely new, right? Negligible penetration, 0%.
Right.
Not even a vehicle on the road. I think one of our first investments was a company, Euler Motors, which actually started putting vehicles on the road. So the key problem that we wanted to address was adoption. And as we evolved into investing, we realized that we can't make singular investments in this space. Our learning will be too weak. We will not be successful. So therefore, we have to follow a value chain or an ecosystem approach.
Right.
It tantamounts to putting almost all your eggs in one basket, but not exactly the same. So what we told some of our investors was very interesting, that if you feel that the EV industry is going to be the next, growth factor, for, let's say, the automotive sector or India as a country, then deploy capital. If you feel that the EV industry is not going to, perform, or there is no future for the EV industry, then I think you're probably investing in the wrong fund.
Right. And how easy was it to convince all the LPs in the beginning?
Very difficult. Almost impossible. Right? It took us a lot of time, but I think the market dynamics helped us over time. Right? We've seen penetration grow from 0% to almost 7% today, and globally, European countries, US, everywhere, etc., it's about 14-15%. Still, much higher. But India as a country, I think India as a country obviously did not have the infrastructure capability. So those questions were difficult to answer. Do you think, how will India develop infrastructure? We didn't tweak our thesis, just to be clear, right? Our thesis was formed, it was well thought out, and we focused on making investments in the commercial side of, let's say, EVs, not
Right.
on the consumer side. And our thesis continued to evolve in the commercial aspects. And this is something which we were able to defend with our LPs, that even though infrastructure does not exist, India's policies may be, a certain manner that may not favor, let's say, commercial aspects, or may favor the consumer more. We will still have, we will still be able to create relevant business models in this space.
Right. And because the ecosystem did not exist, how easy was it to hunt for good deals or good founders you can back?
I can give you a little bit of statistics. We were looking at 1,200 companies a year.
Wow.
So I would say that the industry really picks up on signs of where, things are going next.
Right.
So it's not that the industry does not do that. So it's just about whether you're able to catch those opportunities or not. I mean, India is very entrepreneurial today. I mean, it's unbelievable the kind of entrepreneurs today, the kind of risks that young boys, even veterans are willing to take is unheard of in the earlier stage. I mean, when I was doing private equity, we hadn't heard any sort of let's say entrepreneurs come up and create these kind of companies.
Right. I remember when I used to do private equity consulting, probably around 2013-14, the total deployment in PE market was around 20 billion for the whole year. I remember reading the Bain
Yeah.
annual private equity report because I used to read that like every year and see what is happening. And now I think if I just look at early stage, it's like 3-4 billion per quarter.
Yeah.
So that is early stage in itself is like 12 to 15 billion. So overall PE will be probably multiple times that, right?
So PE, obviously, the check sizes were larger.
Right.
The opportunities were very different. Established companies, it was always growth capital,
Right.
right? This is early stage capital. You're completely looking at it from a very different perspective. So having said that, though our strategy actually has been, we've applied a lot of private equity principles in venture, but that's only for the evaluation piece, with a little bit of tweaks, obviously. Not all of them will work.
Right. Now, fast forwarding from let's say 2019 to now, 2025, how do you see the potential in EV market in India?
So let me start with some statistics, right? Rather than giving you offhand information, right?
Right.
The EV industry today sits at about $35 billion, $40 billion ballpark, right? We made 11 investments in this space.
So 35 billion, that is the money invested.
No. That's the overall industry size.
Okay.
Right. It's not extremely large still. Right?
Okay.
It's still small, but we invested in about 10 odd companies in over 2019 to 2024. It was, and we choose to discount 2 years, which we didn't get because of COVID. We avoided making as many investments.
Right.
After 5 years of the fund, we still have 100% portfolio hit rate. We have zero write-offs on our portfolio. The economics in this industry works. I think that's the primary reason why this industry is relevant. Where unit economics is positive, and at scale, it's lucrative, is what I would say. But having said that, we could see that energy is the new oil, right? So,
Right.
which in itself is the base for the evolution of this industry. So we divided this industry's growth in 3 phases. We said that the first phase is going to be adoption. We will invest in anything that helps, or we will look at plays within our sectors or subsegments that help in the adoption of the industry.
Right.
Or adoption of electric vehicles, to be correctly put. And then we said the next phase, which is phase 2, which is where we're investing from our fund 2 now, is mostly on the technology aspects, which is components, battery recycling, like going deeper into this ecosystem to see
Right.
what will help, further strengthen the base. The third piece is where we feel that consumers will really pick up, which is obviously the largest market. Though, I mean, commercial aspects or commercial market is smaller than, the consumer market. But that is how we look at it, right? The third phase is consumer, where we will have the infrastructure set up, where we will have enough, let's say, OEMs, enough component manufacturers. Like we see the existing automotive industry transition, not entirely, but substantially.
Right.
Having built the same ecosystem that has already been built for the, let's say, ICE, internal combustion engine industry.
So if I look at, let's say, four-wheelers currently, ICE versus EV, I think currently we should be 1-2% EV at this point.
Very substantially low.
Substantially low. So at what percentage do you think this ecosystem will mature and will have similar kind of supply chain, etc.?
Well, it's said that once any industry reaches 5% penetration, it is a substantial industry in itself.
Right.
So we have crossed that mark. That's a that's a great, let's say, mark for us too. Some numbers from around this is India sells about 20 million, let's say 24 million vehicles overall, ballpark. 20 million out of that is two-wheelers, right? So we're pretty much a two-wheeler economy. We're the largest two-wheeler globally. So that's one. And the rest is all, four-wheelers, three-wheelers, etc. And each piece is pretty large in itself, but 20 million two-wheelers is the largest portion.
Right.
Where does the commercial aspect actually play a role is the gig economy, the gig riders for, delivery, for the delivery ecosystem. For Zomato, Swiggy, Zepto, all these players are pushing or would prefer to shift their fleet or their gig riders to use electric vehicles. I think there are about 7 million or 9 million odd gig riders across the country, which is expected to grow overall to about 20 million. So from an overall perspective, even the government's mandate or target is 30% penetration by 2030.
Right.
And I think it's definitely achievable, even without, touching the consumer market.
And do you think two-wheelers, personal two-wheelers will also see similar kind of shift?
There are a lot of people, they eventually, once the infrastructure and battery technology evolves, yes, definitely there will be a shift. It's a complete no-brainer for any person, right? The cost of fuel, at least in a four-wheeler today, and we come to two-wheeler, but at least the cost of fuel, a monthly fuel cost is equivalent to, your EMI of a vehicle, almost, of electric vehicle.
Right.
So it is crossing everybody's mind. It is anxiety that is not allowing people to take that shift.
So the range anxiety, basically.
Yes. And obviously the access to infrastructure, where we invested in one company that does wireless charging. He's able to charge from a 25 centimeter distance wirelessly. If let's say real estate companies are able to embody this company and just lay their entire basements with wireless chargers, you just park your car over it, it'll automatically start charging. The effort to charge a vehicle will reduce over time. So when ease, or let's say when use of convenience comes into play, then automatically I think the shift will take place.
Right.
There's also one company that we've invested in that does autonomous swapping for four-wheelers or let's say larger vehicles. He's got bots that go underneath the vehicle. He's built a skateboard battery, go underneath the vehicle and swap the battery in less than, let's say, 3 minutes. So that's, let's say, even faster than filling fuel.
Right.
So it's not only about cost parity, it's also about time parity. So when both of these aspects will align, we will see a huge shift.
Yeah. So, 3 minutes because you have to stand in the line. Usually. The actual filling is like full tank.
How much time do you take to get a full tank done?
Yeah. Probably you're right.
So,
depending, if you have a smaller car, you're doing like 37, 35, 40 liters.
Yeah.
And a bigger car, 60 liters. Yes.
Yeah. But let's say, even if you stand a minute extra or a couple of minutes extra, it's not gonna change the dynamics.
Right.
The point is a few minutes versus a few hours.
Yes.
I think the difference is there.
Plus the economics.
Yes. Plus the economics.
So that's the combination. Uh, so for this charging infra, right, whenever we have, let's say, widespread wireless charging, or now I see even probably in near future we'll have petrol pumps having charging points, etc. Right. If you look at the power required to sort of, have these massive infra set up and working, what kind of changes do you think as a country at the power grid level or at the generation level or installed capacity, what changes do you think we'll need to make?
It's very difficult for me to answer in terms of what kind of changes do we really need. But I can tell you, we took out a white paper on this because this
Okay.
is a regular question. Not exactly specifically your question, but related to that, right? The questions have been that does India have enough, energy? Does India have enough power?
Right.
So we actually are expected to be a power surplus country. We today have 40% installed capacity of renewable energy. Obviously, the usage is, let's say the connection to the grid, etc., is lower. But having said that, we do have, and we're still expanding that.
Right.
What we definitely need is, laying three-phase lines across the country. So it's distribution of energy rather than installation of energy only, and seamless distribution.
So my understanding is that 80% of power we are generating is thermal or
Yeah,
coal.
coal, yeah.
Yeah. And renewable cannot be effectively stored at this point at scale,
Yeah,
except if you talk about hydro, because there is that
yeah,
energy
yeah.
and different you can create. That potential is stored. So the baseline still has to be thermal.
But this is extremely interesting, and the reason is that the evolution towards electric vehicles is also a base for energy storage. Battery, or let's say, battery technology is the key factor that will help the country actually create energy storage opportunities. It in itself is a very big opportunity, for investment, as
Right.
as you understand it, because every time you will see, any battery station, I just like to call it that. I don't know what it'll be called, but anytime you see a battery station, you'll realize that a lot of batteries are stacked up,
Right.
and all those batteries are obviously getting power fed. But if they have substantial amount of batteries there, it can form for it can create an infrastructure for energy storage as well. And this will also bring the opportunity of back to grid,
Giving back to the
giving back to the grid, right? So the grid stores energy in the batteries, and while obviously the sun is shining, and then obviously it gives back to the grid when needed because energy is stored in the batteries.
In the batteries.
So and those batteries obviously effectively are used for various other purposes, which is automotive, etc.
Right. And so, just for my own knowledge, I'm curious, how do you see the battery technology evolving? What is the current state now? I don't know what kind of batteries do you think you are betting on?
So we've stayed a little clear of investing in batteries. Chemistry is evolving, right? Now, if you look at it today, the cost of battery is actually reduced. Cost of lithium has reduced drastically, therefore bringing parity with the lead acid battery. But lithium today is the primary form of battery technology. China is obviously leaps and bounds ahead of the entire globe, right?
Yes.
But and India is trying to create manufacturing capacity for lithium cells. Let's segregate this because it gets confusing otherwise. Cells versus batteries, right?
Yes.
So create capacity for cell manufacturing, etc. And then over and above that, then there is battery pack technologies that go into the battery pack. We're still, most of it, we're importing cells. We're only creating battery packs here. So still reliant on Korea, China, etc. on on the cell technology.
And do you see that changing? Do you see we will develop our in-house capabilities in future?
We need to, irrespective, but I think it requires a lot of capital, right? Each cell manufacturing plant is requires, couple of $1 billion maybe to set up, etc. And for the
Right.
scale that we need. I think the low-hanging fruit here is battery recycling, because the existing cells, now that the lithium is already in the country being used, so can you extract those minerals and reuse them
Yes.
rather than trying to create another, cell manufacturing capacity.
Yeah.
China actually, or Cattle, one of their leading cell manufacturers, gave a statement that by 2057, I believe, they will not need to mine lithium ever again
Probably there won't
because
be
of
any.
battery recycling.
Probably there
No,
won't
because of battery recycling.
Okay.
So they're saying that our recycling capabilities
Will
will
be
allow
so-
us, and they will be so superior that they'll allow us to, take care or, cater to the entire demand.
Got it. So before I was just reading today about the cost differential between ICE and EV vehicles, right? So there was a nice chart where they had indexed. So on the x-axis you had the time, on the y-axis you had the index values.
Yes.
So China was the country where it's like almost they have brought the cost almost similar. If you buy a EV vehicle or a ICE vehicle, it's almost same. I think India, the differential was the highest versus other countries. So maybe some data I didn't look into.
But the TCO still is very lucrative, the total cost of ownership. For a three-wheeler commercial vehicle or a four-wheeler commercial vehicle like an L5, we break even in about 18 to 20 months. And about 18 months for a two-wheeler. The only scenario that you need to look at is the use case. You have to sweat the asset as much as you're able to sweat the asset, and let's say make money from it. It's completely viable.
Right.